now we're ready for problem 6.4b, and this is a bank reconciliation. And as I briefly mentioned in the week 2 introductory video, a bank reconciliation is basically making sure that your checkbook balance in your financial statements is accurate. And so what we're doing is we're looking at what we have in our records, and we're looking at what the bank has in their records, and we're reconciling the two so that they match, so we can ensure that the bank didn't make any mistakes, which rarely happens, and so that we can ensure that anything that we process that hasn't cleared the bank yet has been accounted for and not missed. And so when you do a bank reconciliation, and there's an example in your book, but typically what you'll do is you'll start with the bank statement balance. Let me make this a little bit bigger for you. Okay. And that is given to us in the problem. It's $46,822.40. And from that, we add any outstanding deposits. And if you have an actual paper bank statement, which a lot of people don't get those anymore, but if you do, you can see this template on the back page of your bank statement. So we had a deposit. It tells us in letter F, that the December 31st daily cash receipts of $9,583.10 were placed in the bank's not depository on that date, but don't appear on the bank statement. So what that means is we have accounted for that in our books. We've showed that that customer paid that, but the bank doesn't have a record yet. And so also we look in letter number B, and we see that check number 1273 and check number 1282 were written and entered in the accounting records but did not clear the bank. And also check number 1231 and 1242 were outstanding in the most recent reconciliation, but 1231 did clear. So we have check number 1242 is still outstanding. Outstanding means we've accounted for it in our financial statements, but the bank has not. Check number 1273. I've switched over to a Mac laptop, and so it's going to take me some time to get used to the keyboard. These checks have not cleared, and those are in the amount of $410.40, $45.89.30, and $400, for a total of $5,399.70. So what we're trying to do is take the bank statement balance and add any deposits that haven't cleared and deduct any checks that haven't cleared. And from that, we get what's called the adjusted bank balance. And that is a Mac function that I was not familiar with. I'm trying to learn to like Macs. So it's our bank statement balance plus our outstanding deposits minus our outstanding checks, and that gives us our adjusted bank balance. And this is what we're hoping to reconcile to in our books. And so over here we have our book balance. So this comes straight from our general ledger. The book balance, let me scoot over one, is $32,878.30, and that is given to you in letter A. It tells you what that is. And so here we have to add any items that would justify that. And so we see in letter C, when the December checks are compared with entries in the accounting records, it is found that check number 1267 had been correctly drawn for $34.56 to pay office supplies, but was entered incorrectly in the accounting records of $34.65. So we need to add, this is check number 1267, we need to add $9 back to our account balance in our general ledger. Okay, Also, we find out that proceeds of a note less the $20 fee were received, and that is $18,980, and that is given to us in letter E. So what that is the bank has collected that for us, and we haven't accounted for that in our general ledger yet, so we have to add that in, okay? Then we have deductions, and so we had an NSF check, meaning we made a deposit and the check didn't clear the bank, so they've returned it, and we need to deduct that from our general ledger. And then we have a printing fee that they told us about in letter D. There's a $99 charge that we have not accounted for either. And if you wonder, did we account for it or not? I mean, in real life, you're going to know. But in the example that we're given in the book, we just have to make that assumption since it's given to us. So we have an adjusted book balance. And again, we'll take our book balance, we'll add adjustments and subtract adjustments. And then we want this number to match this number. And if they do, we reconcile, we do a happy dance, and all is good. If they don't, then we go back and try to figure out what we did wrong. Okay, so then we get to part number 2, and it asks us to prepare the journal entries necessary to bring the company's book balance of cash into conformity with the reconciled cash balance. So this is what we start with. Remember, book balance means that's what's in our general ledger, this 870,830. So we need to adjust anything on this side through journal entries. So we'll start with December 31st. We'll start with the increase to cash of $9 from that error, and then we'll debit back office supplies. We're going to decrease that asset account office supplies because we did that incorrectly when we made the entry. So to correct an entry error, right? And then also on December 31st, we're doing all of these on December 31st, we show that we've collected a note receivable of $18,980. Now we want to show that before the fee because we have to show that that's a collection expense. We want to make sure to reflect the right amount on our notes receivable. So we decreased our notes receivable, meaning they don't owe us that money anymore. So to record note, collection less fees. All right, then we get to the next one, December 31st. And on this one, we had a return check. And so when we deposited that check, we would have decreased Titus Industries accounts receivable, and so now we need to increase that back up because the check was returned. They now owe that money back to us, and that would decrease cash by $762.50. And on our memo, we would say to charge account for NSF check plus fees. All right, and then I think the last one on December 31st, we have printing fees, whatever you want to call it. I'm just going to call it miscellaneous expense, $99, and that decreased cash by $99. And that is to record check printing charge. Okay, so that is how you do the journal entries for bank reconciliation. Basically, what you've got to remember is anything you're doing over here is going to be it's going to be required that you do a journal entry so that you can adjust your book balance, your general ledger balance, to what it's supposed to be once you reconcile that with the bank. So I'm trying to learn to use Mac. So we'll see if we can format this a little bit better for you. There we go. That looks a little bit better. Okay, that's the 5.4b, and that is the end of chapter 6, and so we'll move on to Chapter 7 in the next video.